India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC TV 18 Motilal Oswal studios in Mumbai.
Hello and welcome to Bazaar Morning Call, coming to you live from the CNBC TV 18 Motilal Oswal studio. I'm Lata Venkatesh, with me Surabhi and Rima, and on behalf of all of us, a very happy Christmas to all of you out there.
Very Merry Christmas.
It's Christmas to everybody.
Yeah, it's the season to be jolly.
Absolutely.
And,
season to party.
As you can see, we're trying to do our little bit, and we're in Christmas colors here as well. But I think the street is going to be happy because Santa finally showed up. And bulls will hope and pray that Santa stays for a while, doesn't leave in a jiffy.
Well, I'm not sure how seriously I would take Santa's visit yesterday. In fact, let me start on that note. We did see a bit of Santa more emphatically in the US. Even they had about 10 days of lower closes. And then for the last 2 days, they have seen some green on the screen. Yesterday was clearly emphatic on the Nasdaq, coming up, 1%. It was very clearly a positive. But I don't know how much of that is going to brim over to emerging markets, because the other indicators were anti-emerging markets or not clement to, EMs, especially the dollar index going back above the 108 mark, and the yields, which fell a bit because of the PCE inflation coming in as a little lower than expected. Even that went back to the 4.58% mark. Bond yields higher and dollar index higher can never be good for countries like us, because it is so tempting to be in dollars and to buy absolutely risk-free US bonds, which will give you 4.58 and perhaps a little more because of the currency appreciation. Now, what was happening in India, the rupee fell, and that's the important part. It closed at its lowest point of 85.12 or 85.11, despite the fact that we had a positive equity closing and we had dollar index dipping below the 108 mark to 107.6 at one point in time. It looked fairly good, but the rupee did not take any of the positives because there was a lot of importer buying. The moment you get it below the 85 mark, there was a lot of buying, and it went back and closed higher. So once again, the FII buying yesterday, no, it wasn't buying. It was selling. It was only 170 crore, but that was not because they seem to be wary of selling, but probably more because of holidays, that people are not out there to work. So that's why I wouldn't take Santa's presence on Monday very seriously. It seems to be more because the FIs were not selling in all their fury.
Yeah.
And therefore, people stayed away. The only Santa I see in the picture is in tech stocks. Both Nasdaq is higher, the dollar is stronger. For every very good reasons, I would think the tech stocks can still stage a rally today. But I leave it to Rima and you to decide for that.
But I guess the markets had such a drubbing in the last couple of months that even if it is a false rally, the bulls will take it. For what it's worth, at least it's not sort of splashing the screen with all kinds of red. And maybe they'll hope for some of that, even if it's a false rally or a rally that you don't really believe because the FPIs are away. But for what it's worth, maybe the bulls will hope for more of that, because we're seeing that play out across a lot of the regional markets as well. Trade is very thin, volumes are very light. Markets like Australia, Hong Kong, even Singapore, I think all these markets are closing out very, very early for the Christmas holiday. There's no trade tomorrow. So let's see. Volumes have been on the dipping side. But there's interesting news and data out of Japan, so I just want to put that on the table. First, the BOJ minutes. Remember, the Bank of Japan did not hike rates because it was waiting and watching to see what the Fed does, what the implications are going to be once Donald Trump takes office. But we know that inflation has been rising in Japan. The last print was also higher. That's exactly what the minutes note. They're saying that if inflation moves along expected lines, if it keeps trending higher, then rate hikes are possible. And the BOJ may reach 1% on its benchmark rate by late 2025. So that's interesting. And I think that's the market's expectation as well, that the BOJ is not going to reverse gears so easily. If inflation is trending higher, it will come out with hikes, but it's being very measured, looking at the international picture as well. More news from Japan. Honda is the biggest headline in the region in the last 24 hours because of the merger talks with Nissan. The shares there are surging 15-16%. And not just that, Honda this morning announced a massive buyback. Honda is buying back 24% of its equities. It's $7 billion buyback that Honda has announced. So the street is absolutely loving it. That's a big headline in the region as well. Quick word on oil prices, fairly range-bound. Actually, yesterday oil fell. It was down to almost 72. This morning, there's a bit of a pickup once again. But the forecast that I picked up this morning is really encouraging, at least for us here in India. This is Macquarie saying that the average for the year is going to be about 70.5, which is so much better from the near 80. That's where, if you talk about the average in 2024, then oil averaged close to 80. So it will be a whole $10 lower. That's the expectation as we get into the new year. So that's good news. So we've discussed, of course, the pullback on our street yesterday, backed largely by domestic buying. Domestic buying was pretty good, actually. Once again, clearly domestic mutual funds have not gone on holiday mode because they're very active in the market. But I think the sector that I'll focus on today is going to be telecom, and Rima is going to tell us more about it. Little unusual. We've not heard the government or the regulator come in and talk about tariffs or product pricing. But yesterday there was a note, and there was sort of some chatter in the form of recommendations that should telecom service providers think of bringing back the pure voice packs, non-data, just pure voice small packs. And TRAI said that this would be very helpful for people in rural areas, particularly elders who perhaps don't need the data. So very interesting. It's a recommendation. It's not a diktat. How will the market take it? How will the companies take it? That's what we will wait for. And Rima must have already been working the phones to try and figure this out. So there's more coming from her on this in just a bit.
Well, let's get to the good news, right? Across the world, many markets are shut early today. The not so good news is that we've got a full trading day. But US markets shut today. But even in Asia, you've got New Zealand, Australia, Hong Kong and Singapore. All these markets will be shutting early today. So it's indeed going to be a holiday-thin trade. And tomorrow, across the world, global equity markets are shut. There was also weak economic data coming out of the US. There were two key data points. One, the Conference Board's Consumer Confidence Index fell to 104.7 in December, lower than estimates of 113. And secondly, the non-durable goods orders have declined by over 1% in the month of November. But you know what, guys, I'm feeling the Santa spirit, and I think there is going to be a little bit of a supportive environment for equities, just purely because that FI selling is out. Right? That was such a big headwind, and now that it's out of the way and domestic buying is very much intact, will, at least on the liquidity front, you got that support. And plus, even the IPO action, which was sucking out so much liquidity, now that's come to an end. Towards the year end, there are no new IPOs which are asking investors for subscription. So at least on the liquidity front, I think the environment is a little bit more supportive. But of course, it's not fundamentals, but it's on the liquidity front.
Yeah, mice can be at play when the cat is away.
Oh, absolutely. But guys, by the way, I'm sure all of us have noticed here in Mumbai, the city is decked up like never before for Christmas. It's very, very festive out there. So I'm sure market participants, portfolio managers, money managers, they themselves will look out for a couple of good, fun days ahead. So on that positive note, let's get started with the equity call of the morning. We have Sehadri Sen of NK, who says that a strong market and enhanced flows have pushed the share of equities in household domestic savings nearly 2 times to 31% since FY16. As per their estimates, he says the Indian market is therefore more resilient to FPI selling, and the trend is here to stay. He sees lower fixed income yields, among other factors, continuing to push savers towards equities for another 8 to 10 years. He says domestic mutual funds are more exposed to small and mid caps than FPIs and are taking more active sectoral bets. He believes this will continue driving small and mid cap outperformance and be a drag on heavyweight sectors like financials and staples.
Okay. Well, that is a positive. It's something we underestimate. The inflation targeting regime bringing yields down has, directionally changed Indian household savings. But that puts greater responsibility on mutual fund managers to deliver.